Hi friends, this is the fifth in the series of the Bank Audit video series which I've been recording, and this also happens to be the 8th day of my quarantine period, home isolation. Today we're going to touch upon a very important topic, which is, recently the RBI came out with a circular post the Supreme Court order. So you know what, and since also this would also, other than the RBI Circular of 7th April 2021, I'll also be taking up a few illustrations on the issues with respect to NPA, because during the bank audit season generally I get a number of queries, and most of them happen to be with respect to NPAs. Probably that just goes to prove that in most branch audits it's all about the NP classification, whereas like I've always said that it's not only about the advances. I think any branch audit is has a lot of other things to be seen, but then that of course we can take up in some other series. Now let's get on with the FAQs on NPA and also the RBI Circular of 7th April 2021. Now this video I'm recording, the views I expressed here do not constitute to be the views of either the ICI or the my firm, and also friends, the views I express or whatever opinion I give should not be considered as a professional advice. So the RBI Circular of the 7th April 2021, primarily because the Supreme Court order of on the which came out last week. Now basically it said that the interest on interest which had been charged during the moratorium period of 1st March 2020 to August 31, 2020 had to be refunded or adjusted to the accounts of all the borrowers. Now if you remember, the RBI, the Supreme Court order clarified that the refund or the adjustment had to be done with respect to all the borrowers, unlike what the government and the RBI had earlier said, which kind of related to only the interest on interest being refunded to borrowers of up to 2 crores. Now this particular circular, it gives a very important guideline, and says that the relief of interest on interest which is to be refunded or adjusted. Now obviously as of date there's no system which is finalized. So what it says is the banks need to finalize it along with the help of the IBA and other industry participant bodies. So as of now, we are not sure as to what methodology the banks or the lending institutions would adopt for the calculation of interest on interest which is to be refunded. Now, the important thing which the RBI Circular of 7th April brings out is that the relief is applicable to all borrowers, that's fine. Now, here it says that the relief is to be given to, number one, all those borrowers who had availed the working capital during the moratorium period, irrespective of whether the moratorium had been fully or partially availed or not availed at all. So effectively, the interest on interest would have to be refunded or adjusted to all the borrowers, irrespective of whether the moratorium period had been availed, partially availed, or not availed at all. Also, it clarifies that the banks need to disclose the aggregate amount of the refunded adjusted interest on interest as of 31st March 2021 in the financial statements. As of now, the figures which are coming out in the newspapers is around between 7,500 to 10,000 crores, which if you actually see, it's not too big a figure, but anyway, I mean that is the amount, based on the methodology which comes out, the banks would need to disclose it in the financial statements. Now, with respect to the asset classification, which obviously is the biggest challenge. Now, the RBI circulars, and this has to be read with, because it refers to two circulars of the 17th April 2020 and May 23rd 2020. So the circular says that the accounts which have not granted any moratorium in terms of the COVID-19 regulatory package, obviously they'll be governed by the delinquency norms outlined in the RBI Master Circular of 1st July 2015. So there, there are no issues if no moratorium was granted. You do not get the benefit of the moratorium period of 1st March to 30th August, and the classification of the asset classification would happen as per the RBI Master Circular of 1st July 2015. And in respect of the accounts where the borrowers had opted for the moratorium in terms of the COVID-19 regulatory package from the 1st of March 2020 to 31st August 2020. Now here it says it is be governed by the two circulars of 17th April 2020 and 23rd May 2020. So, whenever you read the circular of the 7th of April 2021, you would have to read both these circulars to actually be able to understand the asset classification. And of course, from 1st September 2020, the asset classification for all such accounts shall be as per the applicable IRAC norms. In fact, this should be now. What happens when the moratorium is granted and the asset classification? What would be the asset classification when the moratorium has been granted? Now, this has been listed out. What I have summarized here is also based on the circular of April 17, 2020 and also 23rd May 2020. So the asset classification when the moratorium is granted. Now, the 23rd May 2020 gives an option that lending institutions are allowed to convert the accumulated interest into FITL for the period which is the moratorium period from 1st March 20 to 31st August 2020. And however, it goes on to state that the FITL, which is so created with respect to the overdue interest or the interest during this period, should be payable not later than 31st March 2021. So, the FITL, whenever you get into the audit and if you find that, FITL has been created, please ensure that it is not outstanding and it is paid up to 31st March 2021. There are some examples we'll take up later. What happens in case it is not paid? Would it be in NPA as of 31st March 2021 or subsequently? I'll take this up subsequently, but this is the provision in the 23rd May 2020 circular that the FITL which is created for the moratorium period has to be paid up to 31st March 2021. Also, an important clarification it gives is that the creation of the FITL, normally creation of FITL is considered to be a concession, and any concession given to any borrower in terms of the RBI Master Circular of July 1, 2015 would amount to restructuring. And once you restructure, as per the Master Circular, one needs the account to be downgraded. Now, this this circular, in fact, the 23rd May 2020 circular clarifies that in the FITL, which is so created for the moratorium period, would not be treated as a concession and resultantly will not be considered as restructuring requiring a downgrade. So, in spite of creation of the FITL, one can carry the account or carry the classification of such account as a standard account, and it would not require the downgrade to a substandard as is required normally whenever you create an FITL in any other thing. So this is very specifically for this period, the COVID related stress period. Now, this was relating to the creation of the FITL. Now, two other clarifications which come out are one with respect to the term loans and the other with respect to the CCOD. Now, the term loans, it says, they have to be classified as which are classified as standard as on February 29, 2020. Even if they are overdue, the moratorium period of March 1, 2020 to 31st August 2020 shall be excluded from the number of days past due for the asset classification. So effectively, when you're classifying an account as an NPA during the current financial year 2021, and you find that a term loan, they had availed of the moratorium period of this 6 months from 1st March to 31st August, then you have to carve out that moratorium period out of the calculation of the past due. Unlike, if the borrower had not availed of the moratorium, then obviously, they would have to be classified in terms of the RBI Master Circular of 1st July 2015. Now, similarly, in respect of the CCOD term loans, which are standard. Now here, every place you would see that, it is the reference date, which is normally as per the 6th August 2020 circular, it is the 1st of March 2020. So, there, if you remember, I had said that during the current year, when we are doing the audit for FY 2021, we would also have to go back during the current year to the earlier financial year, primarily because, all my circulars, they are referring to the earlier, the status as of 29 February 2020 or 1st March 2020, which happens to fall under financial year 1920. So here also in respect of CCOD term loans, so if the account is standard as on 29 February 2020, then the interest applied during the moratorium period of 1st March to 31st August, here again it says shall be excluded for determining the out of order status. So in both the cases, what the circulars of 17th April, 23rd May read together with the 7th April 2021 circular mean is, for the period of the asset classification in borrowers where the moratorium has been opted by them or where the moratorium has been granted by the banks, then they have to be carved out of the calculation part. That is, you carve that period out from 1st March to 31st August, and you imagine as if that period never existed. So, post 29 February, effectively, I take the date of 1st of September whenever I try and calculate the asset classification. Now let's quickly go to the illustrations, and I'll also take up some FAQs which will probably clarify your status whenever if you're facing similar problems during the course of the branch audit. This is a simple case where if the interest and principal of a term loan is overdue since 31st October 19, obviously it becomes an NPA on 29 February 2020. And it is not eligible for the NPA holiday because it is already an NPA on 29 February 2020. Now the second case is a term loan where the interest and principal is overdue since 31st December 2019, and it is standard as on 29 February 2020 obviously, but overdue. If you remember, the 23rd May, these were the conditions there. Now the NPA holiday starts post 29 February, that is from 1st March up to 31st August. Now let's talk of account where there are no recoveries up to 31st March 2021. Now what would be the date of the NPA? Now since I've carved the period of moratorium out of the calculation of past overdue, my account would have to be downgraded with effect from 1st October 2020. That is immediately, I would calculate from 1st of January, since it is overdue since 31st December 19. So I would have 60 days before 1st of March, and then another 30 days post that, and on the 1st of October, that is immediately the next day, it would become an NPA. And of course, all these cases I'm discussing, the basic assumption is no restructuring has been carried out in these cases in terms of the COVID-19 6th August 2020 circular. Now, let's take up another case where, it is only the interest which is overdue, where principal is not, repayment is not commenced. Now, here, the overdue status is as of 31st October 19. It is standard as on 29 February 2020, primarily because of para 2.1.3 of the RBI Master Circular, which says, I'll read it out to you, that in case of interest payments, banks should classify an account as NPA only of the interest due and charged during any quarter. That is, charged during any quarter is the quarter ended 31st December 2019 is not serviced fully within 90 days from the end of the quarter. So, what you would need to do is calculate 90 days from the end of the quarter, which is ending on 31st December 2019. So as of 29 February 2020, 60 days have expired. There is an NPA holiday which has to be carved out up to 31st August 2020. Nothing is received till date. So again, I take another 30 days from the 1st of September. That ends on 30th September, and 1st October 2020, I downgrade it to an NPA. Here again, the basic assumption is it has not been restructured in terms of the COVID-19 6th August 2020 circular, either as an MSME or otherwise. Now, case 4, where the interest principal is overdue since 30th November 2020, this is a straightforward case which, in terms of the 90 days calculation, it will be downgraded to as of 20th February 2021. Of course, provided no restructuring is done. Now, let's take up some CC cases, cash credit overdue cases, overdraft cases. You are aware that there are 3 conditions to classifying an account as an NPA with respect to CCOD, where the accounts have to be continuously overdrawn, no credits in the account, or the credits are insufficient to cover the interest debited during the same period. Now, suppose one of these conditions is applicable since 31st October 2019, then obviously it becomes an NPA on 29 February 2020. Straight away, it's a straightforward case, and obviously since it's not a standard account as of 29 February 2020, it would not be eligible for the NPA holiday. A second case similar to what we took up in the term loan case, here the account is overdrawn or no credits in the account since 31st December 19. Now this account, since it is standard as on 29 February 20, right? So there are, around 60 days which have expired, but it is standard although overdue. If you remember the 23rd May circular, it says that, it has to be standard though overdue. Now the NPA holiday period starts from 1st of March up to 31st August. So I carve that period out and then again calculate another 30 days and classify the account as NPA. If nothing, the account has not been regularized or it's still out of order, and then I downgrade it as of 30th September 2020 because, I have carved out that period and I have taken the overdue period since December 19. And again, no restructuring assumed in the same case. Now, CC cash credit again, CCOD case 3. Suppose the account is overdrawn or no credit since 31st October 20. Now, this straight away would be downgraded to as an NPA as of 29 January 2021. Case 4, if it is overdrawn or out of order since 2nd January 2021, in terms of the 90-day rule, it will becomes the account is standard as on 31st March 2021. Let's take up some FAQs. This is, of course, it comes out of the 23rd May 2020 circular, and also what we've already discussed. Would the moratorium period of 1st March 2020 to 31st August be considered for the purpose of classification? No, it has to be not considered for the purpose of calculating the past due or the out of order status, either in the term loan account or the CCOD account. Now, in case of term loans, considering the moratorium period, would the amount of installment or the EMI be recalculated? Now, if you look at the 23rd May 2020 circular of the RBI, which is the COVID-19 regulatory package, now what the circular said was that the repayment schedule of such loans as also the residual tenor will be shifted across the board, and interest shall continue to accrue on the existing. So effectively, you'll have to shift the tenor based from of the moratorium period. So if the tenor was, let's say, 12 years, then this 6 months gets out, then you increase the tenor by another 6 months, and make adjustments in the EMIs or the installments payable. Here it's a simple question. It says, suppose the 6th installment of term loans is due on 30th June 2020, and now obviously because 30th June 2020 was the moratorium period, obviously this now becomes due on 1st September 2020. So the question is whether the installment would now, the installment falling due on 30th June 2020, whether it will be due on 1st September 2020 or 30th September 2020. And secondly, the 90 days period, when will it be calculated from which date? So to my mind, in my opinion, I think the due date would be the first date after the moratorium ends. So to me, it will be 1st of September 2020, and I'll calculate the 90 days from the 1st September 2020 for the purpose of classifying the account as NPA. Now, this is the question which I had referred to. If the COVID FITL is not paid by 31st March 2021, will the account be classified as an NPA as of 31st March 2021? If you remember the 23rd May 2020 circular, it said that you can create an FITL. Now, but the FITL has to be paid not later than 31st March 2021. Now, obviously, there are two options to this. Now, let's say there are cases where FITL was created and it is not paid up to 31st March 2021. Question is, will the account be classified as an NPA as of 31st March 2021? Let's go by the logic. Number one, we are not sure whether 31st March 2021 is the due date or the last date. Now, it can be both, right? So if it's the due date, that is the due date by which it is to be paid, 31st March 2021, then I'll calculate 90 days from this, and obviously it will fall in June 2021. So the account, if the FITL is not paid up to the quarter ended June 2021, it will be classified, based on the calculation of 90 days from 1st of April 2021. You'll put a NPA date in June 2021. And let's say, the RBI, although it's not clarified, 31st March 2021 was the last date, and by which, it had to be paid post 90 days. So even if, 31st March 2021 is the last date, even after, including the 90 days past due, technically the account can only be classified as an NPA on 1st April 2021. So in both the cases, to my mind, if the FITL is not paid by 31st March 2021, the account cannot be classified as a NPA as of 31st March 2021. Depending on which school of thought you subscribe to, it will be either the 1st of April 2021 or sometime in June 2021. 2021 based on the 90 days delinquency norms. Then the question that whether a branch auditor of a bank, can he declare an account as a fraud? Yes, the branch auditor is definitely within his rights, and in fact there's a clear responsibility on the branch auditor to declare an account as a fraud in case he does find these cases, the transactions which are near to a fraud. But then if you remember, there is a master direction on fraud issued by the RBI, which lists out various early warning signals which actually help you prove that it is a fraud. But then before declaring the account as a fraud as a branch auditor, you need to be very sure about the transactions, whether sorry, whether they actually amount to diversions, whether it is actually a fraud. Because if you've seen some forensic audit reports, it involves a lot of work before one can conclude that the transactions which have happened are fraudulent and the account needs to be declared as a fraud. But then you're absolutely within the right. So, but whenever you do so, please read the master direction of 2016 and also the guidance of the Institute on declaration of fraud in public sector banks. So based on that, based on the information you have, based on the documents you gather, so please be very careful about the documents you gather, because once you declare an account as a fraud based on your report, the bank would obviously start some regulatory reporting, and then if there are cases filed against the borrower, you as an auditor would definitely be called upon to clarify the basis on which you declared the account as a fraud. So your documentation needs to be strong. The basis on which you declare the account has to be strong before you actually take that decision of declaring that account as a fraud. Now the next issue is, in case of a borrower has 3 loan accounts, one loan is classified as a fraud, the other 2 are classified as, let's say, doubtful one. Now, is the classification correct? Friends, this is primarily to bring out the fact that in case there is a single borrower with the same custody, then all the accounts need to carry the same classification, whether the asset classification. So you cannot have a case where one account is a standard account, the other accounts are substandard, or the one account is substandard, the other account is doubtful. So the borrowers with under the same custody have to have the same classification, which is the worst classification, which in this case is a doubtful case. Now here also, in case one account is a fraud, now let's say there is a borrower X, he's taken a housing loan, a car loan, and also some other loan under a proprietorship form. Now if one loan of that particular borrower is classified as a fraud, obviously since he is an individual, you would have to declare all these accounts as fraud and provide for as per the RBI Master Circular of 1st July 2015, either 100% if the bank is doing that, or provide for it over a period of 4 quarters, depending on whatever decision the particular bank has taken. So to summarize, under the same borrower, please ensure that under the same custody, please ensure that similar classification, asset classification, has been done by the branch concerned. Going by the same analogy, is it correct that the borrowers with the same PAN carry different asset classification? Here again, it will again be incorrect, because the same PAN would mean he is the same borrower. So in case you are able to find out that a borrower with, because there is a field of PAN in most CCIS or the NPA classification data which you get. So if you get that now and you're able to identify some borrowers which have the same PAN but different asset classification, then you can easily identify such accounts and then pass an MOC that borrowers with the same PAN need to have the same asset classification. Like if let's say I'm a borrower, I have a housing loan and I'm also the proprietor of two firms where I've taken a CCOD loan. So it cannot be possible that in the housing loan my account is classified as a substandard, but my proprietorship firms where obviously the PAN would be same are classified as standard. So here again, going by the same analogy, if you have the same custody or the same PAN, the asset classification has to be same. Now, another question is whether an account can be restructured twice. First, as per the RBI Circular of 1st January 2019, this is in respect of MSME, read with 11th February 2020, and again in terms of the RBI Circular of 6th August 2020. Now, suppose there is an account which the RBI, which the branch is restructured as per the 6th August 2020, which was also restructured as per the RBI Circular of 1st January 2019. Now, is it possible? This again would be incorrect because if you see the 11th February 2020 circular or the 6th August 2020 circular, now the 6th August 2020 circular clearly says that all other instructions specified in the circular of 11th February 2020 shall remain applicable. And the 11th February 2020 circular says that in case it has been already restructured as per 1st January 2019, it will not be eligible for restructuring again. So effectively, if it's been the MSME account has already been restructured as per 1st January 2019, then it will be ineligible to be restructured as per 6th August 2020 circular. And if any branch has done that, please ensure that the account is downgraded as this would amount to a second time restructuring. A normal problem with most of the auditors face in most branches is when there are some short reviews or quick reviews. The RBI Master Circular of 1st July 2015 is clear in saying that the reviews have to happen not beyond 180 days. So an account has to be renewed or reviewed not beyond 180 days from the date of the first review. What normally branches would do is, they would do a short review. Now, let's say, the date of renewal happens to be on the 1st of October. They have not received the financial statements. They carry out a short review for 90 days. And then, wait for another 3 months and then carry out another short review on the 1st of April 2021. So effectively, they've already crossed that 180 days barrier. So the RBI Master Circular is very clear. It says that the maximum period beyond which the review should not go is 180 days from the date on which it is falling due for review. Even otherwise, if you see some banks that the cash credit account is normally sanctioned for a year, and as soon as the 1 year is gets over, that is the review becomes due, then it starts it starts requiring sanction by the branch manager for every transaction which happens. So basically trying to control that the account needs to be reviewed. So to my mind, you can do quick reviews or short reviews, but they have to be in continuation from the date when it expires. So if it expired on the 30th of September, so I have a short review for 90 days up to, let's say, 31st December. Then another 90, the next 90 days has to be from 1st of January. It cannot be after a gap of let's say 6 months or 3 months. So the 180 days would be calculated from the date it expires and nothing else. So if the bank or the branch is carrying out short reviews, quick reviews, and after a gap of 3 months, 6 months, do not allow that. Straight away calculate the 180 days from the date when it expired, and if it is not been reviewed or renewed post that, you can easily pass an MOC and downgrade the said account. Similar query, with respect to the renewal, is it mandatory to classify an account as NPA where although the operations in the account are healthy, regular limits are pending review for more than 180 days? And what about instances where ad hoc sanction has not been regularized within 180 days? Now here again, see, the RBI has clearly said that, in spite, these are instances where the branches are being pulled up or the banks are pulled up for not, reviewing the accounts within a period of 180 days. And it is clearly said that, the RBI Master Circular of 1st July 2015, that it should not extend beyond 180 days. So irrespective of the operations in the account, generally the branch would say that, look, the accounts are healthy, everything is, the transactions are perfectly within the limit which has been sanctioned or the DP. So why classify the account as an NPA? But that is what the RBI Master Circular of 1st July 2015 says, that, irrespective of whatever reasons the bank may have, but the review period should not stretch beyond 180 days. So here also my point of view would be, if the review is pending for more than 180 days, you would have to go by the Master Circular and downgrade the account. Similarly, in case the ad hoc sanction is not regularized within 180 days, here also one would have to downgrade the account to NPA. Now, these are queries which come up quite frequently. Now, can a cash credit limit be utilized to pay the term loan installments? So definitely yes. Now, there can be two scenarios. One, if when I'm paying the term loan installments, is the CC account irregular or out of order before the payment of the term loan installments, or it was not irregular before the payment of the term loan installments, but became irregular, after the payment of the installments. Now, in case of the first, if the CC account becomes irregular post the payment of the term loan installments, then this should not be allowed, and then you would have to downgrade the account as NPA, the term loan. I mean, you would have to consider as if the term loan installment was never paid. Similarly, if the account is already irregular and if it is paid, then obviously, this will definitely not be allowed, and it would be considered as if, it was paid out of a new sanction or out of irregularity, and you would have to calculate the term loan NPA as per the 90 days delinquency norms. And what if they are not overdrawn pre and post? Then obviously this is perfectly in order, and you can pay the term loan installment from the cash credit and allow the account to be a standard account. Now here, an individual borrower's term loan account is classified as an NPA. How will the CC limit of his proprietorship be classified? Here again, this is going by the same thing, because they'll have the same customer ID. You'll have to classify the account as NPA. And how will the entities where he's a director, partner, etc. be classified? Now this will have no relation to his individual borrower loan account or his proprietorship account, because there is a director or a partner which is a different legal entity, which will have a different customer ID, which will have a different PAN account. So it is only his proprietorship firms which will have to be roped in for the classification as NPA, but not definitely where is a director, partner, or designated partner, etc. Now, an individual borrower's term loan account is classified as an NPA. How will the HUF be classified where the borrower is a Karta? Again, a different legal entity. a different PAN, a different customer ID. So it will have no relation. The HUF account will have to go as per the record of recovery as defined in the Master Circular of 2015 and be classified as standard or substandard depending on the record of recovery, and individual borrower will remain as an NPA based on their record of recovery. Husband and wife are proprietors of two firms with CC limits with counter guarantees. Impact if one of the accounts is classified as NPA on the other, there will be no impact. Both of them are different customers, both of them are different borrowers, both of them are different PANs. The only difference would be that, because of the counter guarantee and one becoming an NPA, if there is a counter guarantee, the security, if it does make a difference, would probably have a impact on classification of the other account as secured or unsecured, depending on whether or not there are other securities available. Now, the MSME definition during the year, if you remember, changed as per the notification of 26 June 2020. And if you've seen that, the resolution framework everywhere, it is the reference date is always March 1, 2020. So even the August 6, 2020 circular, which refers to the restructuring of the MSME. Now the question is, which definition of MSMEs will be applicable for with the purpose of eligibility or otherwise for resolution under the resolution plan. Now here the RBI, this is part of the RBI FAQ. Here it has been clarified that for the purpose of eligibility for resolution, the definition of MSME as existed on 1st March 2020 would be applicable and not in terms of the 26 June 2020 notification. Friends, before we wrap up, I think, what all of you also need to do is please go to the FAQ section of the RBI website on rbi.org.in and especially, download these FAQs which are there available, which have a list of FAQs which will help you in, classifying some accounts, understanding priority sector, MSME. So there are three FAQ circulars which I've listed out. One is with respect to the MSME classification of 28 February 2018. Then there is a priority sector lending FAQs of 20th December 18. And then very recently, there is an FAQ on the resolution framework of COVID-19 related stress, which obviously relates to the 6th August 2020 circular and earlier one 17th April 23rd May. And this has been revised up to December 12, 2020. So obviously, this does not cover the Supreme Court order or the 7th April 2021 circular. Friends, I would also advise you to refer to the FAQs on UDIN available on the UDIN website, especially with respect to the banks, so that you do not have a doubt on whether to generate different UDINs for different certificates and other work you do at the branch level. So friends, we come to the end of the 5th part of my video series for the Bank Audit 2021. In case you do have further queries or further queries on any specific queries you have in the branches, please send me a WhatsApp on my number. Because of my ill health, I would prefer sending you a voice note whenever convenient to me, or else you can send an email on my email ID, and that's about all. Thank you for liking the other videos which I have uploaded. And before I go, I would again say that since I did get in COVID positive in spite of taking all cares possible, following the COVID protocol. So I would again advise you to stay safe, stay home, and stay away from people, stay away from crowds. Thank you. Bye bye. Good night.